The moment that we believe success is determined by an ingrained level of ability as opposed to resilience and hard work, we become brittle in the face of adversity. Joshua Waitzkin. My friends, it takes work. It takes resilience. It takes doing this every day, 10 to 15 minutes, as long as it takes. And as I tell you, once you master this, the world's your oyster. You don't have to worry about how long it takes, because when you master it, the benefits will overwhelm you. Now, let's jump into these charts. We see stocks are down for the day. Bonds and gold are up. Bitcoin is down. Let's see where things ended up. Solid green spinning top for the week. Some up movement there, lots of down movement. Look at that price percent oscillator still hammering down. Derivative oscillator quite negative. This is 2 weeks of losing some of that downward momentum on the derivative oscillator, but that price percent oscillator still stroking down price well below that weekly trend line. Let's go on to the 2-day, take a look at it. And of course, it had been moving up, and as we ended the week, we can see that it's now moving down a little bit as far as the price percent oscillator goes. Derivative oscillator still negative, losing downward momentum. We see 3 spinning tops slowly tracking up. We can see this latest candle getting smaller. Price, and again, we don't have much of a trend line there. We're only connecting 2 candles. You can do that virtually anywhere. Doesn't mean a great deal on that 2-day. We do see, nonetheless, price is below that weekly trend line on the 2-day chart. We do see it being penetrated once, so we'll keep an eye on things. You do see the SPY trying to move up some, but struggling. That all-important price percent oscillator still negative. And this is where you can see the intraday picture. That's the reason we use the 195-minute chart. You might say, what is that? Well, that is truly a half-day chart. 3 hours, 15 minutes. Remember, the market's only open how long? That would be 6 hours and 30 minutes. So this is a true half-day chart. Shows you what's going on intraday. We can see all the downward pressure in the morning, relieved a little bit in the afternoon. On the half day, we can see how things have rolled since the market bottomed back on Thursday, the 24th of February. That happened in the morning, and then slowed down some of that descent up a little in the afternoon. Then it started tracking up for a day, sideways for about a day and a half, down at the end of one day, popping back up, and then over the last day and a half, devolving again. Price percent oscillator is still positive. Derivative oscillator is still positive on this half-day chart, but again, heading down. That is where we are. Still lots of pressure down on the S&P 500, and why wouldn't it be? Inflation out of control, borders out of control, war in Europe, just you name it, it's crazy. And gas spiking, I mean, it just energy set. You name it, lots of things to push the market down. Doesn't mean it'll necessarily go down. The market does what the market wants to do. We don't try to guess what it's going to do. We let the charts show us, and we follow the price movement. What about the NASDAQ 100 down 1.45% for the day? Ended with a green spinning top for the week. Right there on that weekly trend line. Price percent oscillator still heading down. Derivative oscillator quite negative, losing downward momentum. 2-day chart was heading up for a crossover, it looked like, and then after 2 green spinning tops, and then just rolled over right there on that weekly trend line with the 2-day. And again, that's another, well, we do have 3 candles connected, but they're not much of a trend line. That's one of those trend lines you can make happen. But we see the price percent oscillator pulling away from the red signal line. Derivative oscillator gaining some downward momentum. Half day, very similar to the S&P, bottomed out on the morning of Thursday the 24th, and then rolled up sideways, up a little, and then over down. It ended the day down below on this half-day chart, both the weekly and the 2-day. So again, where do we end the week up? Lots of downward pressure on the tech sector as well as the broad S&P 500, the NASDAQ 100, Lots of downward pressure too. What about bonds? Bonds should be a safe haven. Bonds should be, a running contra, running the opposite of what's going on with stocks. And what do we see? Well, it at least for Friday, they were up 1.73%. We still have lots of downward pressure. It is pushing through, though, that weekly trend line, a quite strong trend line. This week has pushed through it. If I move the 2-day out of the way, you can see that long wick on top, smaller wick on the bottom. Price pushed through the weekly trend line. Nonetheless, derivative oscillator still negative. Price percent oscillator a long way from the red signal line for a crossover. And when we look at our 200 period moving average line, you can see that we are below it. So it's got a ways to go. Got to penetrate that, got to cross over in order to really take off. So still lots of downward pressure in bonds. Now we look at this 2-day. Have to move that back because I screwed it up when I moved it so you could see what was going on that weekly candle. We can see an effort to continue to move up. Now these aren't big, super strong here over the last few days, green up candles with no bottom wicks. I mean, you see bottom wicks here, and you see the price percent oscillator pulling away slowly from the red signal line, derivative oscillator heading up. Hadn't reached the most recent high that we saw on the Tuesday, Wednesday 2-day candle. This Thursday, Friday candle not doing that, but moving up a bit of a trend line there. And we did have that 2-day crossover going up, which typically is going to lead for a weekly vertical crossover at some point, unless we have a 2-day recross. Now let's look at the half-day chart. We can see where bonds peaked back on, most recent peak back on Tuesday, the 1st of March, and then sort of rolling down for 2 days, and then popping up on Friday, crossed over, and then right back up again on that half day. Up a lot in the morning, peeling some of that off in the afternoon. Nonetheless, bounding up. Ended the day 1.73%. As I said, overall, though, still lots of downward pressure in bonds. 2-day is trying to lead the way to a rally. We'll see if it prevails. Now we move on to gold, where much brighter, as bright as gold can be. Quite nice. What do we see happening? Well, we saw gold cross over going up all the way back on the week ending November the 29th. Remember 2021 when all we had to worry about was COVID? Well, we live in a new world now, don't we? We saw things peak there at the last peak we saw in 2021 was the week ending the 19th of November. Then down for 3 weeks, sort of trending sideways and up a little bit going into January, then down again at the beginning of February. And then we started moving on up back on the week ending the 11th of February. We had that 2-day recross where a bunch of you folks jumped in to ride the recross going up, and it has been sweet to you. Somewhere in that 170 something range to a high of 183.98. Again, quite beautiful. Price percent oscillator spiking up, derivative oscillator heading up, nice green up candle with a wick higher than last week's. We look at the 2-day. Of course, there's that 2-day recross back on Monday the 14th. That's when that actually occurred. Again, don't try to call a 2-day candle on a weekly chart. You won't get it right. That's when the recross occurred. And that again, somewhere in the 170 range, heading on up just beautifully. Only one, half day of pullback in there that we saw on Monday. I'm sorry, 2 days of pullback that we saw the Friday, Monday there in late February, and just been beautiful as the derivative oscillator gains momentum, price percent oscillator spiking up. Now we'll get to the half-day chart. And what do we see there? Well, we can see again pulling away from the red signal line, heading up nicely. Derivative oscillator switched over in the morning to green, and it's all gold. Beautiful. So that's where we are on gold. Still lots of energy pushing gold up, which one would expect if everything in the world is on fire. Now, We go to Bitcoin. What do we see there? Well, if I look at the Bitcoin futures, down around 6% for the day. Bitcoin, grayscale Bitcoin down 7%. And as we look at things, we see we ended the week with a green spinning top. Still, that derivative oscillator is still negative, but losing momentum. Price percent oscillator flat. One thing you can count on with Bitcoin is some volatility. Let's look at the 2-day. Let's see. Okay. Yep. Let's go to the 2-day, and we see again, not reaching a higher high, just sort of flat, about the same spot where the top of the candle is, a much smaller candle. Price percent oscillator flattening, derivative oscillator is pretty much flat too, but green still. This is where when we look at what was happening, in fact, I'm going to switch over to the Van Eck because I can show you more intraday what was actually happening. 2 days of strong down movement down in the morning, further down in the afternoon, crossed over on that half-day chart in the afternoon. Derivative oscillator also flipped over. So we can see where Bitcoin crossed over there at the beginning of the week on Monday, the 28th of February, and then popped on up, and then, of course, consequently started rolling over, heading down as we got to midweek, and then just sort of where it started. But again, we'll keep an eye on Bitcoin. When we look at Bitcoin overall, we have not crossed over going up on this weekly chart. We're waiting for it. Still have some downward pressure there on this 2-day chart. It has crossed over, but it hasn't led us to that beautiful the absolutely gorgeous power of the weekly vertical crossover. But we do see above that 200 period moving average, which is nice to see. That's always important to see. And as we look at the 200 period moving average on the weekly chart, we can see we're well above that. So it is good to see things, at least bouncing off that 200 period moving average line on the 2-day chart. That is where we are, folks, as we end the week. Again, another exciting week of trading. Follow these charts each and every day. Patreon members, I'm sorry that we could not get our charts to work yesterday and be able to generate for you those 20 weekly vertical crossovers. I'll tell you what I'm going to do to forestall that from happening in the future. I'm going to go ahead and select 20 weekly vertical crossovers on Wednesday so that at least I have them Thursday if we have another technical issue. I have no idea. I got nothing from TC2000 to tell me what was going on and why the charts were not working last night. That is the the second time that I've really had much trouble with TC2000 and all the times I have used it. But again, we'll make do and push through. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.